Welcome back to Smart Property Designs Limited. We are now going to commence with Task 5. Now in Task 5 we're going to be posting an adjustment journal, and adjustments are made to the accounts at the end of each accounting period. So for example, at the end of a financial year we will need to post adjustments, and these will be normally done via the journal function. Or if we're sort of putting together our monthly management accounts, then we will need to make adjustments at the end of each month for things like accruals and prepayments, which is what this journal here relates to. Okay, now accruals and prepayments are two adjustments that must be made to ensure that the accounts are accurate and show a true and fair view. Okay, so change. Okay, so what's an accrual? Right, well basically an accrual is where goods and services have been consumed during an accounting period, but the invoice and payment are not due until after the end of the accounting period in which the consumption occurred. Okay, now just remember, an accrual is always classified as a current liability. Right. Okay, so an example of an accrual would be something like an electricity bill. Now electricity tends to be billed on a quarterly basis, so the bill is only received every 3 months. But of course when we're preparing our monthly management accounts, for example, then the consumption of the electricity would need to be accounted in each month. Right. So what is a prepayment? Well, prepayment is basically a payment in advance for goods or services that have not yet been consumed. So effectively the opposite of an accrual. So where an accrual occurs, we've basically consumed goods and services that we haven't yet paid for, but with a prepayment, we're actually paying in advance for goods and services that we haven't yet consumed. So a prepayment is always classified as a current asset. And an example would be something like when a business is paying rent. Okay, so business might have a monthly rental cost of £1,000, but they might pay, for example, they might pay their rent 6 months in advance, so they would pay their rent possibly in January. So £6,000 would go out of the bank in January for sort of 6 months rent. Obviously if you're accounting on a cash basis, that's £6,000. Let's think about the double entry for a second. Okay, so we've paid out £6,000 in January, so what are we going to do? We're going to probably debit rent, okay, and we're going to credit the bank. Okay, we're going to debit, rent will be debited 6,000 and the bank will be debited 6,000. But obviously our rent in January is not £6,000. Our rent expense in January is only £1,000. So we're going to have to do an adjustment there so that the accounts reflect the correct expenses. Right, so on Blackboard there's a little exercise for you, a little illustration, which you can have a little practice at to see how the journals impact on the rent and prepayment accounts. So possibly in your own time, if you go to File on Sage and just open the demo data, and there you could have a little play around. As I say, there's a little exercise for you to do on Blackboard in your own time after you've completed this Smart Property Designs Limited exercise, and then you can just have a look and see how journals, prepayment journals, can affect the rental and prepayment accounts. Okay, just to sort of further your understanding. Right. Okay. Okay, something else that, just talking about the sort of prepayment and accruals adjustment journal, I just want to review with you the four main fundamental concepts within the rules of accounting. Okay. So basically we have the accruals concept, which means that revenue and expenses are recorded when they occur and not when cash is received or paid out. Okay, so that's effectively what we're making sure is happening when we're posting task 5, the journal in task 5, is that obviously money is being paid out, but we need to account for the revenue not on a cash basis, but on an accruals basis, using the accruals concept. Okay, the other thing is, the other concept is the consistency concept, which states that once an accounting method has been chosen, this method should continue to be used, unless there's a major reason as to why it should be changed. Okay, we also then have the going concern concept, which means that an entity will continue to be in business for the foreseeable future. So when you're preparing accounts, those accounts are prepared on the basis that the entity, the business entity, will continue in business for the foreseeable future. It has the funds to continue in business. Okay, and then number 4 is the prudence concept, and this states that expenses and liabilities should be recognised in the accounts as soon as possible, but revenues, income, should only be stated in the accounts when they are actually realised. Okay, so that's very important actually when you're posting transactions to the accounts. Expenses and liabilities should be posted as soon as possible. So for example, if you're writing a cheque payment, you're paying a supplier invoice and you write a cheque, that cheque payment should be posted straight away. But if a customer rings up and says, yes, we're sending payment to you next week, do not post that receipt to the accounts until it's actually been received in the bank. So revenues and income should only be posted to the accounts when you've actually received them, when they're actually realised. Okay, there are other concepts. The main one which we're using when we're obviously posting the journal in task 5 is the matching concept. So expenses are recognised in the same accounting period as the related revenues. So application of this concept, the matching concept, follows accrual accounting. Okay, and then there's some others there actually which I'll just let you read in your own time, such as the objectivity concept, materiality, and lower of cost or market value. Okay, that should be right, lower of cost or market value. Okay, so just have a read through that. Again, that will be on Blackboard as well. Right, so I think having gone through that, we can now actually post our journal. Okay, so again, remember we need to include our reference. Now this is the second journal, so the reference will be JNL 002. The date is, we're posting it at the end of the month because we're preparing our monthly management accounts. Effectively what we're doing here is we're reversing a prepayment. Okay, and an accrual, right. Okay, so let's get on and post that journal, right. So if we go to Sage, and you'll need to go to the nominal ledger, okay. So again, remember you can possibly reach from modules. Okay, so if you go into the nominal ledger and then we select journals. Okay, now the reference is JNL 002 and the date is 30th of April 2013. Okay. So rent. So the nominal code is written in there for you, 7100. Right. Okay, now details. Okay, so it's prepayments for April. Okay. Remember you can use your F6 button to copy descriptions down. Okay, so what we're doing here is actually we're obviously debiting the rent expense, so we're taking the rent, moving the rent expense from the prepayments to rent. Okay, so just posting our adjustment journal there for the end of the month. Okay, now again, once you just check that it balances and check your details are correct, you can save that. Okay, now we're now going to move on to task 6. Okay, so if we're going to have a look at task 6 now, right, you're instructed to post the following invoices and credit notes to the supplier ledger. Okay, and then we need to, okay, we're going to print a supplier activity report and an age creditors analysis. Right, okay. Alright then. Okay, so you know how to post invoices. We've done this before, so I'm not going to talk through it. I'm just going to do it on the screen and you can work with me. Okay. Right, actually, okay, now remember something you will need to note here is these amounts are inclusive of VAT. So if we go, yeah, up here, it does state on the front of the question and also here at the top, all amounts are inclusive of VAT. Okay, so as I've said at the beginning, we can use F9. So if we type in the gross here in the net column as I have done, and then if you select F9, that will calculate the VAT for you using the shortcut keys, okay, that we looked at in week 1. Or alternatively, if you come down here, you'll see there's this Calc Net button, okay. If we select Calc Net, you'll see that Sage separates out the net and the VAT for you from the gross. So you'll just have to remember to do that, okay? Something to be aware of, if the amounts that you're given for the invoices or the credit notes, if it states that they're inclusive of that, you will need to calculate the net. Okay, if it says exclusive of VAT, if it said exclusive of VAT, you could just type in the amount and tab across as we did in the last exercise and add the VAT on. But in this case, you don't want to be adding VAT on because the VAT is already included in the amount that you've been given, so you need to calculate the net. Okay, now you'll notice that as we set the nominal codes when we set up the accounts, that it's actually defaulting as we type in the account reference. Okay, you'll see here 7502 is automatically come up. We've got British Telecom and it's going to allocate it to the telephone expense. Okay, and that's because we set it up. We set the nominal code, the default nominal code, when we set up the account. Okay, now of course, a good thing to do would be to add up your invoices, total up the invoices that you have, and then just check your batch total against the batch total on the supplier invoice screen, okay? So just remember that control check before you save. Okay, so once you've done that and you're happy with everything and the details have been entered correctly, then we can just save. Okay, now the next part down here, we now need to post a credit note. Okay, now we haven't posted credit notes before, but it's the same process as posting an invoice, except that this time we need to go to credit. Okay, so if we select the credit button, you'll notice that it comes up in red here. That's just Sage alerting you to the fact that you're no longer in the invoice batching screen. You've now moved to the credit note batching screen. Okay, so now we're going to run a supplier activity report. So again, for reports, just go to Reports. If we scroll down, you can see here we have supplier activity reports. And we've been asked to run a detailed supplier activity report. So if we just double click on the detailed, okay, now the criteria values will come up. Now this is Sage just asking you to enter the details for the what information do you require. Now again, we've got here supplier references, so we could actually select to run the report for a certain range or individual supplier accounts, but we're going to run it for all our supplier accounts. So that's just from British Telecom all the way down to Viking. Again, now we could run the report just for certain dates. If we wanted to look at possibly invoices posted within a certain date period, but we're actually going to run it for the entire period. So we don't need to select dates here. We could select dates for the 1st of April to the 30th of April, but we'll just leave it as it is. We just want everything. Or you could select transaction numbers. Now, this transaction number, remember, this is referring to the Sage transaction number that Sage gives to every transaction that you post. Okay, or we could do it in regard to nominal codes if we were just looking at, for example, telephone expenses. Okay. So let's just say OK. Okay, now that brings up our supplier activity report. Okay, you'll see here now we have all the details. It's broken down into supplier accounts, so British Telecom at the top in alphabetical order, and it going down. Okay, each account we have the total outstanding. So you see here we've got OS, so that gives us the total amount that we owe to that supplier, and you can see the individual invoices that have been posted with the invoice number and the credit note. Okay, right, so if we come down right to the end, okay, so that's, yeah. Okay, so that's our activity listing. So you can now actually PDF that and save it. Okay, the next report that we're asked for is age creditors analysis. Now this will not list every single transaction, it will just show invoices outstanding. So whereas with the activity report it lists everything, whether it's outstanding or not, a creditors, an age creditors report will just show what the invoices that are outstanding, so not the invoices that we've paid. And we're asked for detailed. Okay, again we could select a particular supplier, but we're going to do it for all of them, and we could select by date. Okay, now at the moment we haven't actually paid and allocated any payments to the invoices. So it's looking very similar to the activity listing at the moment. We've got our accounts, supplier accounts, again in alphabetical order, and each tells us what's outstanding. But here we have obviously periods, so depending on how you've set up your payment periods, whether for 30 days or 7 days, it would normally be 30, 60, 90, so period 1 would be 30 days due owing, period 2 would be 60 days, period 3 would be 90, and then anything older than 90 days would come into this older column here. This is the current, so under 30 days, that's what we currently owe to British Telecom. Okay. Right, now if we just come down, follow the report down, here we can actually see the total that's owed. So the total that's owed to all suppliers. Okay, we've got our grand totals here. Right, okay, so if you just want to PDF that and save it for our records. Okay, we will now move on to task 7. Now in task 7 we're going to be posting invoices and credit notes, but this time to the customer ledger. Okay, so again, we've done this before, so I'm not going to talk all the way through it. Remember, do your control check before you start posting the invoices. So add up the total of the invoices and then just make sure that total matches with the batch total that you've entered on the Sage screen. Okay, remember these amounts are inclusive of VAT as well. Okay, so they're inclusive of VAT, so you'll need to calculate the net on these amounts that have been entered. Just check your nominal code. So I'm going to enter these invoices and you can start doing that with me as well. Okay, now just check that your nominal codes are correct and the dates are correct, and obviously the amounts. Check that your total on your screen matches with the total that you counted up earlier. Okay, and once you're happy that that is correct, then just save the batch and it will be posted to the accounts. Okay, so moving on now, we'll just post the credit notes. Okay, again we're asked to print out an activity report and an age debtor analysis. Okay, so if we go to reports and let's look for our activity reports. Okay, again we can just have a look here. Okay, yes, we're asked for a detailed customer report, so if we highlight customer activity detailed. Now you can either generate the report here, make sure you are on preview, we don't want to print anything out, okay, and always it's a good idea always just to preview, always make sure you're on preview even if you are printing out in the office rather than PDFing the reports, because if you preview it and just have a look you'll notice any errors that maybe need to be corrected before you actually print out the paper copy. Okay, so yeah, we can either select generate report or you can just click on it twice. Okay, again we're given our options to modify our criteria if we want to, but we're just going to leave that as it is. I'm just going to say OK. Okay, and now we have our activity report, which is basically listing everything that has been entered into the accounts so far. Okay, so if you want to PDF that and save it for your records, the next report we're asked for is the age debtors analysis. So again, you'll see here we have age debtors reports, and okay, this time we're just asked for a summary. So if we go to summary, age debtor analysis summary, just double click that. Again, make sure you are on preview. Okay, and then we can just select OK. You know, this time it looks slightly different, but basically it's just giving us the totals of what's outstanding for each account, rather than listing the individual invoices that are outstanding. Okay, so it just gives us an idea of what monies are owed to us from our customers. Okay, and again you've got the current period, period 1, 2 and 3. Okay, and that brings us to our break. So if you'd like to have a coffee or finish up for the day, that's the basically we'll be covering the remainder of the tasks the final questions next week. So we'll be looking at task 8 to task 13 next week.